Hi everyone, I hope you're all doing well, and today we're going to be talking about Carnival stock, which is a stock that's kind of just faded in the background and no one's really talking about it. Back in March, April, when we kind of were in the peak of the COVID-19, I think nearly every single YouTube channel was talking about Carnival stock, and then out of nowhere, no one's talked about it and it's just fallen off a cliff. So I felt like Carnival deserves some attention because it has quietly been making a few moves in the background. Like I say, everyone's kind of forgotten about it now, so it's kind of all about the EV vehicles that are kind of taking over the stock market scene in the YouTube scene right now about EV stocks, and I felt like Carnival deserved a little bit of attention, a little bit of love, so we're going to give it that today. So guys, if you can smash that like button and we'll get stuck into Carnival stock. So some background on Carnival stock for you guys that don't really know, and generally about the company and also my history of Carnival as well. Carnival was a company or a cruise company that was actually doing pretty well pre-COVID. It was a company that was paying a nice dividend that was just about a 4% dividend yield. As well as that, the company itself was in a pretty decent position. It was a company that wasn't really struggling. It was growing EPS and revenue something around about 4-5% range every year, which was really healthy. And there was a lot of potential on that share price gain. You were also picking up a nice little dividend, and the stock was actually downtrending just a little bit because of some little tensions about some fuel prices, and I think there was this port in Cuba that was causing a few problems. But in general, the stock was in a pretty decent position. The company was in a decent position. And then obviously we had the COVID-19 come out, and the COVID-19 obviously changed the stock. It was one of the stocks that pretty much overnight kind of got absolutely slaughtered, and the stock went absolutely down huge because everyone realised. And I think as well there was also that incident where there was all them people on the ships that basically just were passing COVID-19 around to each other, and no one were letting the ships dock at the countries to deal with the patients, which obviously wasn't a great situation. And everyone kind of knew this was going to be one of the companies that was going to get hurt massively by the COVID-19, and that's kind of what happens to the stock, and we saw the stock absolutely dive off the face of the earth pretty much overnight. So my kind of position with Carnival stock, if you guys don't know, is it was a company that I actually owned going into COVID-19, which is an absolute stinger. It stung my portfolio absolutely huge. My position that I was in Carnival dropped down to about 50% being down. And then I was one that actually bought into Carnival something around the $13 range in COVID-19, and at one point I was actually doing okay on my position. The stock went down to $8, and then eventually the stock actually rose up to somewhere around the 24 range, and then the stock actually has dipped down now to about $14 as making this video. So the stock's kind of gone up and now it's slightly going down, and I'm not going to lie, looking back at it, maybe I did have a chance to sell it at that $20 range, but it's one of those where I kind of took the risk on this company, and the reason why I took this risk on this company is to try and get them massive rewards if the company was successful and was able to turn it around after the COVID. Now, a few of you guys might be saying, if I'm from the UK, why didn't I buy it on the UK stock exchange? And that's because previously, until this year, I only bought US companies, and I bought Carnival in 2018. So obviously I bought the US company at the time, and maybe for tax purposes it would have been better to buy it on the UK stock market, but I wanted to keep all my stock in dollars, which made more sense, of course. But yeah, obviously the stock has kind of risen and now it's dropped again, and it's kind of just been fading and no one's really been talking about it. So first of all, the thing I am going to say about Carnival is this here spec play. It is a massive spec play. It's not a dividend stock because it's cancelled its dividend. It's not a value play because obviously we talk about the potential that you're buying in this company, and either it makes it through to the other side and it has massive potential, or the company goes bankrupt and obviously you pretty much go down to zero. And obviously spec plays are the most riskiest plays that you can do in the stock market, and like I say, it's not something that you ever want to put your whole money in, but if you feel like you're confident enough in these companies and there's going to be big rewards, then it's fair having a little bit of your portfolio in there. And in my portfolio right now, I do have 3 spec plays that do go on. So I do have Carnival, the other one's being Cineworld, and the other one is Workhorse. And all 3 of these, Carnival is one of those that I'm seeing if the company can make it out of bankruptcy level. Cineworld, number one, again, potential to go bankrupt. If it makes it out bankrupt, doesn't go bankrupt, then it'll have big upside. And Workhorse is obviously the one that if it lands the big United States Parcel Service contract, then it'll see massive gains. So it is one of my free spec plays that I do have in my portfolio. And spec plays are companies which shouldn't make a mass amount of your portfolio up, and also every time you invest in these sort of companies, you should be putting money in that you're willing to lose. And all the money that I put into Carnival is, money that if the stock was to go to zero, obviously I'm happy to, well, I'm not happy to lose that money. That's probably the wrong thing to say, but I'm okay. I'm not going to go, oh crap, I can't pay my car insurance next week. It's that sort of situation that's going on. So I'm going to go through the negative points with Carnival first, and then I'll go through the positive points of Carnival towards the end, and what I think about the stock as well. So the negative one is obviously high loans. It's had to take a lot of high loans on to obviously keep the company going. A lot of high interest, and a lot of these high interest loans will have to start getting paid. I believe it is in 2023, which obviously the company will need to be bringing money in by then to obviously start paying a lot of these loans off. So obviously from the health of the company wise, it has changed. It's not as healthy. I mean, the company wasn't in a great healthy position beforehand, but it was okay. It's not cheap to be buy ships that cost billions of pounds. But in general, it wasn't in a terrible position, but obviously the high loans have taken the balance sheet down a little bit right now. Obviously, you've got the second wave, and obviously if the second wave happens, then this is going to be, the Carnival is going to be knocked back absolutely huge. Travel is going to be knocked back huge. And obviously, as long as the coronavirus is around, it's probably going to limit travel to where they're allowed to go into, where they're allowed to operate. And also managing that situation of the COVID, taking your ship, like how many people you can have on your ship down to, accommodate that, your testing. So obviously, this, the second wave is going to be affecting the company. You also have income. So obviously income's going to be down because you're probably not going to allow as many people on the ships. So obviously the company's going to take a while to get back to the levels that it was at in 2019. So obviously you have that. The dividend, a lot of people used to get into this stock for the dividend, and obviously the dividend at the moment is one thing that will not be getting paid into this company. So you're going to lose a lot of buyers that were attracted to the company in that way. You're not going to have them actually come back into buying to the company until the income's being paid, and that won't get paid until the income comes in. So you've kind of lost a big share of the shareholders in here, so they're probably not going to be coming back into this company for, probably 2-3 years. So, kind of where this audience was at for the people that would buy this stock has kind of disappeared. And obviously you've got the bankruptcy levels, and obviously is this company going to go bankrupt? And that's one of the big threats. And if it doesn't start operating soon, obviously that's going to be one of the problems, especially when these high loans start catching up with the company. Now there is some positives to this company. So first of all, it has secured a lot of cash, and this cash will basically see it through to 2021 with no income coming in. So it has got a bit of a safety net, but obviously, the safety net isn't forever. At some point, it does need to get back to operating. Operation level. So for the company to be positive or break even on cash levels, it needs to be somewhere around about 30 to 50% occupation levels on the ships. So obviously, that's not a huge amount. Obviously, you can't have 100% capacity on these ships, as what you did previously, because you're going to have to make everything, socially distanced and everything like that. So the amount of people that are going to be allowed on this ship are going to be dropped. But when you look and think 30 to 50% isn't absolutely huge. And what we've seen so far, the demand seems okay. And I think people will be eager to go back on holiday, to go back on cruises. 50% on every ship is quite, I think, seeable. I think that is quite doable for Carnival to get into a position where they have 30 to 50% of people coming back on the ships. And when you start saying after 50%, you start saying that you're going to get to profitability. If potentially you look at, 2021, can we get to 70% of levels of ships being full? It seems okay. So from that side of it, it seems like it is doable. And like I say, cruises in general, there's a lot of demand for cruises. People are going to go back on cruises at some point. We've already seen people willing to book at the moment, even though it seems like they just, the operating time for Carnival keeps getting knocked back month by month. There's still people willing to book, and they will go back to cruises. It's a big industry that will recover. You can't tell me that, in 5 years time people are just going to stop going on cruises. It's going to happen. Even if there's that fear of people not wanting to get back on the ships, and potentially some customers will be lost because they'll be thinking, I don't want to get into the situation where, you know, in March people were on ships and they couldn't dock anywhere because they weren't allowed in. You know, people don't want to get into that situation, but at the same time cruise demand will come back, and it will at least come back to this 30 to 50% level and then increase from there once everything has been seemed like successful. And I'm sure Carnival are looking at safety measures to put in place, you know, like with testing, for example. So overall, when you look at the company and you look how much this company has sold off, you know, you talk about a company that was, you know, potentially $40 down to $14, and you look right there at them sort of prices and you're saying, you know, if this company is going to see it through, for sure this company is going to go back up to $40, or at least somewhere in that range. So you look at this company and, you know, there's potential for 100% upside, maybe even 200% upside from these prices, but that's all about if the company makes it through the scenario that it is in right now. So you've got to weigh it up and think the stock price does have potential to double, even triple in the next 2 to 5 years. The risk you've got to take on is obviously the loans, bankruptcy and income, and weigh that up. And now I think, if I'm being honest, there's probably still about a 30% chance that Carnival, you know, could potentially go bankrupt, which is a very high percentage. But what we're dealing with here now is you've got the 70%, and obviously 70% is bigger than 30%, so the odds are on your favour, and I think they should get through here at some. I think, you know, when you think about they've got a year, and I think the whole CV situation will hopefully calm down, and it seems to be calming down and relaxing a little bit now. And I think when they get the testing right, the amount of people that are on the ships are reduced. If there was to have an outbreak, I think Carnival will be able to deal with that situation. And like I said, it is a very high risk stock, and part of me does look back and think maybe with such a quick jump I should have probably sold around about the $20 range. But you still look at this company and you think it's got a lot of cash secured for a really long time, and also when you look at how easy it is for it to break even, there's some potential with this company. And it's one of those where you've got to weigh it up, and is it a right fit for you? If it's if you're investing into a company where there's this much risk of it going bankrupt, you've got to take on that and see, are you happy with that situation? Are you happy with taking on a company that you have 30% of going bankrupt in? And that goes down to you as an investor. Personally, for me, I think they will make it through here, and that's why I say like invest in the company, because I think I'll see the rewards from this one. But I just felt like in general everyone kind of stopped talking about Carnival, so I thought I'd update you with that position, guys. And as always, if you've made it all the way to the end of the video, if you can smash the like button, that'd be absolutely amazing. If you're new around here, make sure you subscribe, that would be absolutely amazing as well. And I'll see you in the next video.